Joining us right now is Mainstay Capital Management CEO David Kudla. David, good to see you. Thanks so much for joining us.
Good morning, Maria.
What's your take on markets? Obviously, we had a horrible beginning of the year. Things have stabilized last 2 weeks or so. Big rally began last Thursday. Would you buy into it?
Well, I think for investors, the key here is to recognize the market environment that we're moving into. We had the market rise for 4 years through mid-year last year with not even a 10% correction. Investors became very accustomed to a market moving higher with very low volatility. We had a correction in August, another correction in January of more than 10%. So now we've had 2 corrections in 6 months. And we think we're now in this environment where the market will be more trendless, but with a lot of volatility, which will be a lot of anxiety for investors.
Mike Murphy is with us today. And Mike, is it all about earnings in terms of the backdrop?
I really think it is. I think earnings are the big story. Earnings are what can push us higher and out of this trading range and back toward our new highs. But, you know, I really want to look at sectors that have been beaten up a lot, like financials. And then on the flip side, I want to look at some technology names like Facebook that have really held up extremely well in this pullback, you know, just trading right near its recent highs. So I think there are opportunities out there. But to David's point, this is a different market. We're no longer in this raging bull market where every day you hit new highs. So tread carefully, have a longer-term time horizon, but there are opportunities out there for sure.
What do you think about that, David?
Well, I think that, you know, when we look at the market for this year, we're looking at steadying our portfolio. So there may be some opportunities in financials. We think there's opportunities in technology still, some growth areas. We're looking at consumer staples. The question right now for investors, would you rather have a stock priced, a growth stock priced for perfection, or maybe come off that price for perfection a little bit, or an undervalued asset that's paying a high dividend that's going to withstand this volatility better and offer you a decent return? We think that's where consumer staples really come in as an opportunity to steady an investor's portfolio.
Kagan?
Well, how much, if you were trying to protect your portfolio, give it some ballast from volatility, how much should you own in treasuries at this point? That's one of the only places where you don't get wild swings and you still get some income.
Yeah, well, the interesting thing about treasuries, which have performed very well, you know, in the fear trade, when we have a market selling off like the beginning of the year, treasuries do well. Concern is that, you know, we are still expecting the Federal Reserve to raise interest rates, and that'll have an impact on interest rate sensitive bonds, specifically treasuries. So that's where we look at liquid alternative investments, it's a hedge fund strategy within a mutual fund or ETF wrapper that can give us another flavor to the portfolio, diversification in the portfolio, help protect against volatility, hedge against it, in some cases even profit from the volatility, this wild volatility we expect, and not have that interest rate sensitive risk that we have with bonds. Not that you shouldn't have bonds in your portfolio still from a diversification standpoint.
When does the Fed raise rates, you think, David?
Well, if we look at, you know, there's a big disparity between the Fed futures and the dot plot.
Yeah, what do you think? When do you think the Fed raises? March? Is it March?
I think probably June. I think you can't take March off the table, because if we look at this CPI data that just came in and what their intent is, it was first to get off the zero bound, now it's to normalize rates. They want to move.
They want to move, but they can't move because the economy's so just sort of stagnant.
They can't move, and they've said they'll be data dependent. I don't think the data supports another rate hike.
In 16?
Yeah.
David Kudla, yeah, go ahead. Final word, David.
They'll raise this year.
They'll raise
again.
Good to see you, sir. Thanks so much.
Thank
David Kudla, Mainstay Capital. Before